G'day, mates. Welcome to the first episode of the year, and it's a big one. The December 2024 property market data just dropped, and it's showing a widespread downturn across Australia's housing market. But what does this mean for 2025? Are we heading for a crash, or is this just a bump in the road? Stick around, this episode is packed with insights, laughs, and a few surprises. Let's dive in. December 2024, the market takes a dip. First up, let's break down the December 2024 data. For the first time in 22 months, Aussie property prices dropped by 0.1%. Is this the start of a downward cycle? Maybe. But remember, December and January are the low season for real estate. So don't panic just yet. We'll need to see February and March data to know for sure. Sydney and Melbourne, the big cities, take a hit. Sydney's housing market ended its 20-month streak of growth in October, and the decline sped up in December with a 0.6% drop. Melbourne, down 0.7%. Both cities have crossed our warning threshold, but here's the twist. Not every suburb is declining. Some areas are still holding steady, or even growing. Brisbane, Adelaide, Perth, the midsize boom. While Sydney and Melbourne are struggling, Brisbane, Adelaide, and Perth are still riding the wave. Brisbane saw a 0.5% increase in December, Adelaide climbed 0.6%, and Perth a whopping 0.7%. These mid-sized cities have been booming for 22 months straight, but even they're starting to lose momentum. Is the party over? Rental yields inflation, the silver linings. Here's some good news. Rental yields are still strong. Darwin leads the pack at 6.7%, while Sydney lags at 3%. And inflation? Down to 3.2% in November. That's a noticeable drop from October's 3.5%. But with unemployment holding steady at 4%, the RBA might not cut rates until April. Stay tuned. 2025, the year of big changes. 2025 is shaping up to be a wild ride. The RBA might cut rates, but APRA could tighten lending rules. Plus, there's a federal election on the horizon, and who knows what Trump or China will do. Buckle up, folks. It's going to be a turbulent year. How to invest in 2025, active versus passive. So, how do you navigate this chaos? First, decide, are you an active or passive investor? Active investors flip properties, renovate, and split titles. But if you're like most of us, passive investing is the way to go. Buy, hold, and let the market do the work. Here's a quick rundown of the 7 steps to passive investing. Set your wealth goals. Conduct a financial health check. Create an investment plan. Plan your financing. Plan your taxes. Plan for wealth transfer. Manage your portfolio. 2 paths to success: growth versus cash flow. In 2025, there are 2 main strategies. High capital growth, perfect for beginners. Buy properties that appreciate quickly, even if they have a slight negative cash flow. High cash flow, ideal for those close to retirement. Focus on properties that generate strong rental income. So, will 2025 be a crash or just a glorious mess? Either way, don't stress. Markets bounce back like my Wi-Fi during a Zoom call. Stay savvy, laugh at the chaos, and remember, drop your wildest housing predictions below. House with garden fire, and hey, if the market crashes, at least we'll finally afford a backyard for the kangaroos.